Hope that you guys are all having an amazing Saturday. I wanted to share an article that I just read up on, and I thought that it was really interesting, especially for those that are just getting into the market. I think it's important to understand not just all of the good, but also some of the risk that is currently presenting itself in this market. And for those that don't know what I'm talking about, in today's video, I wanted to talk about pretty much the narrow market breadth, right? The S&P 500 and NASDAQ are hitting record highs, but only a small number of mega cap tech stocks such as Nvidia, AMD, and Apple are lifting the averages, meaning that as NASDAQ and the S&P 500 are trading at all-time highs, it's really just a selected few of really big mega cap stocks that are carrying the market to those all-time highs, while the rest of these tech companies and other retail stocks are performing below the average. So this means that fewer stocks are participating in the rally, which often precedes to market corrections. Now, this doesn't mean that the market is going to have to pull on back. It's just acknowledging what it is that's currently happening right now. And I don't think it's wrong to acknowledge it, because we should all know. What is, if I were to ask you the theme of 2025, if you were to invest in any one or two sectors, which are the ones that have the most hype, most momentum right now? And many of you guys would probably say crypto, right? That's one. And second is AI. AI has been, I would say, the biggest headline of 2025. And rightfully so. It's, in my opinion, barely scratching the surface, but has also led to very extreme valuations. There are some companies that I believe have earned those valuations to some degree, like Nvidia. And then there's other companies that I believe are just running off of the headline and the story that they are telling, because we all know the fundamentals are not there. And in that case, I would say that example would be something like TEM, right? Tempest AI. I wanted to share this with you, right? Tempest AI is one of those companies that and we'll talk about this concept right now. I found it to be in this article, and I saw it to be very interesting. The first thing is that a little bit of price momentum with a good story has been well rewarded in this market. I love that, the way that that was said, because that is so true. If there was a theme, if there was a story for this year, if a company has a good story and good price momentum, it does extremely well in this market, right? In a market full of what I like to say, greed, lofty valuations don't really matter right now, right? And that's one thing that I want to follow up with. Another thing that was said is that fundamentals matter in the long run, but in the short run, they're meaningless, which again, we can acknowledge is also a constant theme in 2025. But the thing that I want to share with you is like Nvidia. Nvidia has nearly a if not higher than a $4 trillion market cap, which is, I'm kind of back and forth. I'm invested in Nvidia long term, but it's kind of earned it, right? Like its PE ratio is not that insane because it's a company that prints money, and it's absolutely dominating that AI space for semiconductors. But then you have, in my opinion, these BS companies that also try to piggyback off of the pretty story, right? And nice price momentum, and that's TEM. In my opinion, this is a BS AI company. If you've ever looked into their fundamentals and their financials, it's insane. It's a terrible company. It loses money every single year, and it's not growing. Yet its valuation is insane. It went from $31 to highs of $91 in like 2 to 3 months. And do you guys understand why? It was because Nancy Pelosi announced that she invested in this company. So that is what acted as a catalyst driving this price up. And then again, if it has a pretty story with nice price momentum, it does well in this market. And I think that's important to acknowledge because it's so true, right? There's a huge difference between investing in a stock and trading a stock. And in my opinion, it makes sense on why someone would have the conviction to want to trade TEM, because it meets those two criteria. It's an AI-driven stock with a pretty story, and it has beautiful price momentum. Again, it meets both criteria to excel in this market. But what happens when things begin to turn around? Like many of you guys know, if you're a little bit more, I would say, well-versed in the stock market, just like we saw back in 2021, right? From 2020 to 2021, markets did exceptionally well after the post-pandemic rally. But then what happened? We saw a shift, inflation became high, Federal Reserve began to raise interest rates, not cut them, and we needed to fight against that 9.1 inflation. And then markets aggressively began to downturn. And we saw extreme valuations for, again, a lot of these inflated stocks that no longer mattered what pretty story they were telling. What mattered is the actual fundamentals, the financials. Is this company actually performing, or is it simply a lofty valuation? And that's what I'm just here to remind you, is that I don't ever want to discourage you to take advantage of an opportunity that can yield you a good return. At the end of the day, you're all adults. You're going to be taking advantage of whatever opportunities you see fit. I'm just here to remind you is that these cycles tend to repeat themselves. And if you pay attention to what is currently happening, there is a huge disconnect between the companies that are performing and doing well versus the companies that are fundamentally actually not far off from their valuation. And I just hope that, again, at these elevated levels, you do your part so you're not surprised if markets do begin to downturn. It's like the rubber band effect. The larger and the further a company becomes overbought, the more it becomes stretched. Eventually, fundamentals will matter in the long run. Those valuations snap, and those are always the companies that see the largest retracement. And I just think that newer investors and traders need to be reminded. So if you're over leveraged, you're over margined at these elevated levels, you just do your part in preparing. No one can predict the future. There's no reason to pretend like we can, but everyone can prepare for it. And this is the Moomoo trading application. Not only do they allow you to backtest any algorithm that you either use as one of their presets, or you can create one on your own based off of your own trading strategy. You backtest it, you test it just like we did, a 15% return, a $1,500 gain. And once you have it working just like you want it to, you can actually implement it on a real trade. And you might be asking, well, this doesn't seem very beginner focused. You're right. It's tailored to more of the experienced trader. So if you're tired of your beginner trading platform, this is something that you have to test out. And for a limited time right now, you can have an initial deposit of anywhere from $100 to $5,000 and receive a huge sign-up bonus. On top of that, they have an 8.1% APY, which means that you earn 8.1% on any uninvested funds. So even while you're still learning and your funds are just sitting in your account, you are still earning. Again, if you want to download Moomoo to learn more, first link in the description down below.